this lesson, the aim is to learn about the dual effect of double entry. The first 3 learning goals are repeated from the previous lesson. In this lesson, we will be adjusting assets, liabilities and equity, and using the accounting equation to explain the dual effect of double entry. In the previous lesson, we learned about the statement of financial position, which is the financial statement that reports on the financial structure and health of a business, what's been invested and borrowed, and how it's been used. The statement lists the business's assets and liabilities. Whilst learning double entry, we can identify assets as things that have value and could be converted to cash. Assets include cash already held in the business. We can identify liabilities as financial obligations, debts owed to others. Here's the first question of the lesson. Pause the video and replay it when you're ready to review the answer. Typically, a business's assets might include property, motor vehicles, office and computer equipment, and inventory or stock. All of this could be sold to be converted into cash if the business needed it. Customers' debts will also convert to cash once they pay what's owed, and the business hopefully has some cash in the bank already. Typical liabilities include bank loans and debts owed to those that have supplied the business with materials or goods on credit. These are the business's financial obligations, debts that need to be repaid. Equity, also known as capital, is the business's net worth. It's the amount that could be returned to the investors if the business was to sell all of its assets and repay all of its debts. Equity is classified as a liability as it's owed to the investors. The calculation we use to calculate a business's net worth is called the accounting equation. Total assets less total liabilities equals equity or capital. Get ready to pause the video again to give yourself time to read and answer the question. The business's assets total £100,000 and its liabilities total £42,000. Using the accounting equation, we can calculate equity as £58,000. Please pause the video if you need more time to review the answer. In a double entry bookkeeping system, the total of the business's assets will always equal the total of its liabilities. The liabilities section shows where the money is coming from, investors, bank loans and other forms of borrowing, or buying using credit, and the assets section shows how it is being used. Perhaps the business has bought office equipment and stock and has deposited some at the bank. When processing business transactions in the double entry bookkeeping system, this balance is always maintained. Now we're going to learn about how we achieve this using the dual aspect concept. To become proficient at double entry, we need to start by carefully thinking through the effects of business transactions. Let's consider the effect if you borrowed money from the bank. The loan money will be paid into your bank account, but you'll also have a debt that needs to be repaid. What's the effect if you use some of the money to buy a car? Your bank balance would reduce, but you'll own a valuable car. What's the effect of settling a credit card debt? You'd have less money in the bank, but you'd have no credit card debt. The dual effect you see happening here is what we call the dual aspect concept in double entry bookkeeping. Every business transaction causes a dual effect which are equal and opposite. Get ready to pause the video so you can give yourself time to read and answer the question. Don't worry if you found this first one difficult. A friend is joining the business, probably as a business partner, and they're investing £50,000. It's likely to be paid into the business bank account, so the bank balance will increase. The equal and opposite effect is that capital increases. The friend is effectively lending the money to the business. At some point in the future, it may need to be repaid. So capital is classified as a liability. Please pause the video at any time if you would like more time to think about the answer, especially as the topic becomes more complex. The bank balance will reduce when the machinery is purchased. The equal and opposite effect is that the business now owns valuable machinery. Here, one asset, cash, has been exchanged for another, machinery. When the bank loan is repaid, the bank balance will reduce again. The equal and opposite effect is that the debt is reduced. Now we'll look at how these transactions affect the statement of financial position, as well as how the balance between assets and liabilities is maintained. Let's say you're starting a new business and you're using £50,000 of your own cash. You'll pay £50,000 into the business's bank account, so you'll create a business asset. The equal and opposite effect is the creation of a liability. The investment is recorded as equity or capital to indicate it's been provided by you, the investor. It belongs to you and it could be repaid at any time in the future. The dual effect of this business transaction has been double entered in two places. In the liabilities section, we've shown where the money is coming from, and in the assets section, we are showing where it is in the business. The total of the business's assets equal the total of its liabilities. Get ready to pause the video to give yourself time to read and answer the question. The funds have been paid into the bank, so the bank balance will increase, but you now owe the bank £20,000. Let's adjust the statement of financial position. The bank balance increases by £20,000, giving a new balance of £70,000. The equal and opposite effect is the creation of a liability, as £20,000 needs to be repaid to the bank. The liabilities section is showing us where the money has come from and what needs to be repaid in the future. And the assets section is showing where it is in the business. Balance has been maintained as the total of the business's assets equals the total of its liabilities. Let's say you use the funds in the bank to buy a vehicle. When you buy a vehicle and pay for it in full, the bank balance will reduce, but the cash has been invested in a vehicle, a different type of asset. The equal and opposite effect is a reduction in the value of one asset and an increase in the value of another. So the asset total is still £70,000. There's balance as no adjustment has been made in the liabilities section. Get ready to pause the video to give yourself time to read and answer the question. In this example, the bank balance reduces by £14,000 and it is replaced with another asset, the office equipment. Balance is maintained as the total of the assets is still equal to the total of the liabilities. Get ready to pause the video to give yourself time to read and answer the question. The loan repayment is paid through the bank, reducing the bank balance, and the debt is reduced by the same amount. Although the totals of each section has now changed, balance is still maintained. Get ready to pause the video to give yourself time to read and answer the question. In this example, the change is in the liabilities section. The loan repayment will reduce the amount owed by £500, but it is replaced with credit card debt. The balance between assets and liabilities is still maintained. Throughout all of the activities, even though there has been changes in assets and liabilities, equity remains at £50,000. Another way to check the accuracy of your bookkeeping is to check this using the accounting equation. If the balance of equity does change when it's not intended, then a bookkeeping error has been made. The balance of equity will change over time. For example, investors may want to invest more. They may withdraw from capital. Capital grows when profit is made and retained in the business, and it reduces if the business is loss-making. To summarise, in this lesson, we've learned that every business transaction causes a dual effect, which are equal and opposite, and the purpose of the double entry bookkeeping system is to record this. I hope you've enjoyed learning about the dual aspect of double entry. In the next lesson, you'll be using asset and liability ledger accounts to record business transactions.